When you hear the word FinTech, you're probably picturing some disruptive startup, something launched in the last few years. But what if I told you one of the most interesting FinTech stories is about a company that's been around since 1999? Today, we're deconstructing the Belgian investment platform, Bolero. So, this is Bolero. And yeah, at first glance, it looks like a typical modern online broker, right? It's got the sleek logo, the clean interface. But its story? Well, its story holds some really surprising lessons about what fintech innovation is actually all about. But here's the twist. This is the part that really got our attention. What if I told you this modern-looking platform has actually been around for over 2.5 decades? That's right, it launched way back in 1999, which in the digital world makes it an absolute veteran. So how on earth does a company survive, and not just survive, but thrive for that long? Well, it's a story of evolution, not revolution. Let's dig into how Bolero became a fintech pioneer by playing the long game. This timeline really maps out a journey of steady, methodical innovation. You see, Bolero started as one of the first online brokers back in '99. Then, in 2014, it had a huge platform revamp to modernize its systems. A few years later, in 2018, it got fully integrated into its parent company, blending its online services with their in-person and mobile banking. And now, it's looking ahead to 2026 by embracing regulated crypto. This is not a company that's standing still. It's just constantly, quietly adapting. So what's the secret sauce to its longevity? It all comes down to this really powerful hybrid model. It combines the best of two very different worlds, the solid trust of a bank with the nimble speed of an online broker. And here's the crucial detail. Bolero isn't some scrappy standalone startup. It's the online investment arm of KBC Group, which is a major financial player. This gives it direct access to all the deep market expertise and the powerful trading infrastructure of its parent company right from the get-go. This quote just puts their whole value proposition in a nutshell. As a user, you get the best of both worlds. You get the flexibility and the speed you'd expect from an online-first company, but it's combined with the security and expertise of a huge established bank. It's really about agility paired with stability. It's also really important to get their service model. Bolero is what's called execution only. What that means is they provide you with the platform, all the tools, but you, the investor, are in the driver's seat. You have full control. They'll execute your orders, but they won't give you any financial advice. Okay, let's pop the hood and look at the engine room. How does this whole platform actually work? We're going to dive into its business model and some of the really clever technology that powers it. Their business model is actually refreshingly simple. They make their money from transaction fees and some optional paid add-ons for the really active traders. But look at what's free. Opening an account, and this is a big one, custody of your securities. Unlike a lot of traditional models, they don't charge you just for the privilege of holding your investments with them. Now, when you hear fintech and see a bank card, your mind probably jumps straight to payments, right? But this is where Bolero's approach gets really clever and kind of flips that whole assumption on its head. The answer is a hard no. You don't use your bank card for payments on the platform itself. Instead, that card becomes something way more important. It's basically the key to the front door. This is just a brilliant use of existing trusted infrastructure. Instead of reinventing the wheel, Bolero leverages the bank card and reader system, something people already have, something they already trust, as a high-security authentication device. It's a fantastic example of fintech innovation that isn't about creating new payment systems, but about smartly repurposing existing ones for rock-solid security. And Bolero's tech isn't just about security either. They're also using AI to make the user experience better. They've got this assistant called Maddie, which provides digital tools and content. And this is key, remember. In that execution-only model where they can't give advice, using AI to provide helpful information is a really smart way to empower their investors. So here's a quick breakdown of their product suite. You've got the core brokerage account for most self-directed investors. Then, for the more active folks, there's a premium Bolero Trader add-on. And then, coming up on the horizon, is their regulated gateway into crypto, which targets investors who want secure, trusted access to this whole new asset class. So where is this established platform headed next? Well, its move into crypto isn't just about adding a new feature. It's a massive signal about the future of investing and how traditional players are adapting to it. And this is a huge deal. By integrating the two biggest cryptocurrencies into their platform and doing it within a fully regulated framework, Bolero is basically building a bridge between traditional finance and the world of digital assets for everyday retail investors. And look, this move into crypto isn't some random bet. It's the logical next step for a platform that has a long history of being recognized as a leader. As you can see, they were named Best Online Broker for 5 straight years and have picked up Best Investment Bank awards more recently. This history of excellence gives their new crypto venture a foundation of credibility that, honestly, very few startups could ever hope to claim.
Okay, let's wrap this all up. What can we learn from this story? Let's try to distill the key lessons from Bolero into a kind of blueprint for a different but maybe equally powerful model of fintech innovation. So, the crucial takeaway here is that Bolero shows us a totally different path to fintech success. It proves that fintech isn't always about being the new kid on the block. Instead, by leveraging bank backing for that trust halo, by repurposing payment rails for security, and now by moving into regulated crypto, it shows that a model built on steady evolution can be an incredibly powerful formula. And that leaves us with one final thought to chew on. As the lines between banking, technology, and investing just keep getting blurrier, is this combination of digital agility and institutional trust, is that the winning formula for the future of finance? It's definitely a question worth thinking about.